Hello everyone, my name is Marcello Kolax and we have another outlook ahead of us for the European energy markets starting the 11th of September 2023. But before we do that, I would like to point your attention to something fun I've been working on over the past couple of years. I'm really excited to present this to all of you, and it is the Clever Markets Technical Analysis Training specifically for European energy markets. So here's the thing. If you could do me a great favor and simply navigate to clevermarkets.com and then have a look at our training site where we have a quick explanation of how we actually conduct our technical analysis and how we train it. The next course starts on the 25th of September, and it's a 7-week technical analysis academy, and you will learn, well, essentially everything that I've learned over the past 10 years condensed in probably like 17 hours of lectures. And here is just a rough overview. So it starts very simple, like theory and context and charting types, and it gets a little bit more complex later on. But here's the thing, even if you think that you probably know trend and momentum tools, you would be surprised how many unknown unknowns there are. So here I really encourage you, even if you don't take the course, just try to think back of how you first learned about the tools that you're currently using, and if this was the solid source that it should be. So do have a look. It starts on the 25th of September. Group discounts are available if you're multiple people from the same company. It is the industry's only technical analysis course specifically made for European energy markets. Okay, cool. Let's go back to what you're here for, the weekly technical analysis. We start on the TTF once more, and I always like to zoom out. You should know that by now, of course. And we do see that we have had this ginormous uptrend, of course. It goes back to 2020. We peaked in August 2022, and now we are down here. I will never stop saying that even if you watch my videos every single week, it's always good to just zoom out. Okay, so with these like really long term, or with these like longer term trends, it's usually good to have a look at momentum tools. I'm using the MACD here because in the very short term, prices are usually mean reverting. So what that means is, like, for example, on the daily chart, you have these like price swings and fluctuations that go around some mean price essentially. Yeah. Then on the more like on a weekly chart with the longer term trends, usually we use a trend following methodology. So this will also be covered in the technical analysis course starting on the 25th of September. So yes, essentially, we're looking to use like different methodologies for different time frames to always stay profitable. So we are out of this channel here, and now that we are zooming in, I switched from the log chart to the arithmetic chart. Yes, I know I haven't shown you you folks that previously. Whoop, what is this? But here it truly does make sense once we are zoomed in to actually go a little bit from the log to the arithmetic chart. But when you're zooming out and you're looking at everything, log chart. When you're zooming in and try to like look for like real price targets and price levels and all that, then yeah, why not? I'm going back to the normal one. Okay, let's ignore all these lines for now. What is happening? What has been happening? We obviously moved past the channel quite some time ago in July. We have now pushed sideways, and the midterm outlook for the TTF front month remains neutral because we are more or less moving in a rectangle that is something like this. So midterm neutral. Let's have a look at the daily chart. Okay, so I'm just moving this rectangle just for ease. And can you see previously it did make sense to look at a triangle, because obviously a triangle was forming here, right? And then we did have the Australian strikes, LNG strikes that made it through the market. So technical analysis helped us to see how high the price can go, and technical analysis told us for how long we might stay elevated. So this is exactly what TA helps us. Yes, we're not trying to like predict the news. Of course, fundamental and technical analysis neither can do that. But with technical analysis combined with fundamental analysis, that gives us like really good targets that we can actually work with. Essentially, TA makes fundamental analysis actionable. All right, and if you're following these, so what I would like to do now, I am wondering, is this triangle still relevant? I would like to argue no, yeah, because it isn't. Because we have like moved way below it again, so I do not think there's much value in that. So that's why I am going with the rectangle here. You can see the upper boundaries of this rectangle are a little bit fuzzy, so it could be put here, or it could be put here or here, yeah. So there's many options where we actually could put the rectangle. So in these big, rougher guidance lines, it is okay to draw with a crayon. We don't need a sharp pencil for now. I will make this a little bit nicer for the next week. All right, you can see the green, sorry, the white arrows. That is last week's assessment, so I put these arrows on. The consistent line means there was a preferred case, and the dash line was the less likely alternative case. Can you see what TA helps us with? It helps us to be prepared for any sort of market, right? So with all the evidence available to us, last week we said the most likely direction is towards like 29, and this did happen. However, we also know when we are wrong. So a move above 39.38 would have told us that we should abandon this very near term bearish view in favor for a more bullish stance. So can you see how like TA works? We're not trying to predict anything. It just tells us when we are wrong, and it tells us how to act in every possible market situation. Okay, so how did we end the week? Okay, so we did end the week with a doji candle. What is that showing us? Well, essentially just hesitation, just hesitation. And at the end of the week, I wonder if it's more or less meaningful, but usually throughout the weekend, the minds do change. So yeah, I wonder if we will continue lower at the start of next week. It would make sense because overall, what we established is we started making lower lows and lower highs, which is a sign of a near-term bear trend. Yeah, so now we have this. So what we would like to see is a move below 29 in order to continue this trajectory, right? If, however, alternatively, we do make it towards the upper end, which I think is the somewhat less likely possibility right now, then we would know that we have to abandon our bearish stance as soon as you move above this peak here. Okay, makes sense? All right, so for now, let's have a look at secondary tools. We do see that, okay, so the MACD is still moving lower, which is in line with this downtrend here. So lower highs, lower lows, okay. So we are about to push below the zero line. This would be a firm bearish signal. Let's have a quick look at volume. Volume is showing us that on a down leg, volume is rising. So that means that the market overall, up until now, is still favoring bearish continuation. Okay, cool. All chalked up in favor of the bears. So, but what is this? We can see that the stochastic, which is my favorite oscillator, gave us a bullish signal. Okay. So, and we do have this hesitation candle. So what is happening? What's happening here? First of all, what is the stochastic showing us? It shows us that over a past period, we have made an unusually high or new high, yeah, in comparison to the last previous price range. We look at the chart and we see, yeah, that's exactly what's happening. So right now, this is just a reflection of this. And this is a hesitation candle. So overall, my stance remains bearish. And I would still say that we are heading for 29. And if we take that successfully, then all these old levels become relevant again. What do I think over? So yeah, first of all, I do think, yeah, we might continue lower. I'm just putting it here right in the middle, just to show that I think it's most likely to break lower than we towards here. Alternatively, I am wrong if we actually move above 39.38. That's when I would be wrong, and then we would probably attack the upper end of this rectangle again. So this here is wrong now, so it's not a triangle target anymore. This would be a rectangle target. I will look into that later, but a rectangle target would be just the width of this triangle then applied to yeah to the upside when we break out. So does this mean Marcello is like overall bearish? Well, yeah, but only for the near term. Can you see? Here's a difference between near and midterm outlooks. This is where it's called like multi-time frame analysis. And for all you out there on the fundamental side, I highly encourage you to have like different models for different time frames. So, for example, let's have a quick look. So we did have this really long-term downtrend, yeah, on the daily chart. Let's get back on the weekly. And we do see that overall we are swinging a little bit higher on the stochastics, but now we peaked out twice here, which is just a reflection of this. There you go, of this rectangle. Overall, we have been pushing higher. Okay, okay, okay. Let's go in the daily chart. We do see that we have been moving lower within it, all right, and overall we are still moving bearish. So this shows us that this rectangle can continue for quite some time. So you can swing, 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 and all what this here is showing is just the possibility to reach the lower end of the rectangle. Not that we are going to resolve the rectangle to the downside and that the losses are going to continue. No, no, no. This here, near term, it really just shows us what's happening within the rectangle. Once again, zooming out on the broader chart, we do see that bearish momentum isn't quite there anymore. And the rectangle could serve as a basing pattern, an accumulation pattern before the markets move higher. So that's why midterm I'm neutral, not bearish. I'm neutral because the market can go either way. Looking at this, well, this is, I mean, I am saying it publicly, but I wouldn't advise it. But to me, it seems as if there might be a chance for the market to eventually break higher again, simply because it's kind of winter already coming. Yeah. But within, we can still move lower and you can swing. And I would like to know when I'm wrong, and I am wrong if we move past this rectangle, these rectangle boundaries, then we would know for sure. Okay, so last week's analysis was more or less bang on. Hey, that was good. Let's have a look at Brent. Okay, so Brent is pretty cool. Let's zoom out on the weekly chart. Once again, we do see a long-term trend up. Then we moved lower, and for this entire year, we have been in a sideways trend and we shifted lower once. Now, can you see, for the first time since, what is this? November, oh my God. We did break higher and we did close higher with confidence. And the stochastic is still in overbought territory. This is not the bearish signal. Being in it is not the bearish signal. Moving out of it would be the bearish signal. So that's often misunderstood. So I'm speaking to quite a few traders who still believe that if we move into the extreme level, then we get a bearish signal. Not so much, no. It's when you move out of it, that's when you get the bearish signal. And this sort of like insight is also part of the 7-week technical analysis course starting on the 25th of September. I have no shame. I'm just putting it in there, the little advertisement. We also do see that for the longest time, even when we're still in the sideways trend, the MACD has been shifting higher. Okay, good. And we also, for the past couple of weeks, months, wow, since August, we did break higher, and yeah, everything is in favor of the bulls. And now we look at the next important peak, which is here. So right there near 99, which is 100, right? So it's a psychologically important round number and coincides with this peak. And I would believe that the 100 would be the next target for us. Not tomorrow, not the day after tomorrow, but this is like the weekly charts in the coming, yeah, probably months. And in any healthy trend, we want to see in order to make it sustainable, right? We want to see these retracements higher, maybe retracement higher. Yeah, so this is just part of healthy profit taking or loss taking, depends on where you are. So midterm, Brent bullish, heading towards 100. Near term, this is last week's explanation. So can you see, I did think that we would see a little bit of a correction lower before we push higher. Well, we broke above this strong, thick resistance area. We just broke clean through it. But with the evidence that was available to us last week, this would have made sense. But overall, my near-term view was still bullish, only in the like very near term, like intraday charts, like 15 minutes, there was a little bit of a suspicion of a little downtrend, but overall still bullish. And it seems as if just the timing was a little bit off. So we are, yeah, just pushing higher for now. So down here, you can ignore that. Last week, I simply explained that there's different areas of support that traders are looking at. So this would make this here a very thick area of support, because different traders with different trading styles, they would all look kind of at the same thing. Yeah, so that's the point I wanted to make. So I'm removing these now because they're not really relevant anymore. They're a little bit far away now. Okay, so this here is kind of interesting. I think it's called like a runaway market, because some traders might be waiting for a pullback so they can get it on the cheap and then yeah, move in. But I wonder if this is like a runaway market where the hopeful bulls never really get a chance to jump into the trend at a lower price. So if we are continue doing, like, we move higher, then he now a little bit sideways and then higher again and then sideways, and some bulls on the sideline, they're still like waiting for like a deep retraction so they can jump into the trend. And if it never happens, then probably they miss out on the entire move. So I don't know who you are watching this, but I'm just saying there's a chance of maybe not a full retracement happening. If there was, we would immediately start looking at our FIBs. We pull them out and we'd see, okay, 23%, 23.6%, near 88.86 is just noise. This is not a deep retracement. Yeah, this is truly just noise, and probably the market would be heading higher just instantaneously. Below 23.6 towards 38.2. By the way, I'm looking at these levels here, yeah? So, which is 87. That's a normal, healthy, shallow correction. And then everything until like 61 is also a normal, healthy, maybe profit taking sort of correction. Anything below that to the 78.6, that would be not so good for the bulls, and I would probably call it quits then. So, but until we actually get a little bit of a toppy pattern, stochastic still bullish, this is bullish, no bullish, no, yeah, this here is bullish, no sign of a bearish candle here whatsoever. So this bearish engulfing was immediately undone with this green candle. So right now there's no point in drawing in fib retracements, but if it was, then we would. So what do I think? I think that there is a chance of the market of a shallow correction, not shallow correction even, more of a runaway market, where we would, let me get the right thing here. There you go. I'm just signifying this, that maybe we have like a little bit of a nothing move at the start of the week, before we move ultimately higher towards 100. This is not going to happen in one go. So there is peaks and troughs. Actually, I will draw this in, so I remember for next week. So probably here, and then you'll probably wait for the next retracement and something like this. This here is not precise right now. Alternatively, we would probably get a little bit of a correction if we draw in some FIBs, probably until the 61.8, which is, whoop, there you go. Taking the ultimate low, there you go, 61.8 is, oh, perfect right here. Before we keep pushing higher again. But once again, this is an alternative. I don't see this happening right now. But if it was to happen, so if we break below this area here, yeah, 88, That might be a good entry opportunity for you. But overall, I still believe that ultimately we would still move higher. But yeah, I'm not sure if we will get a good entry opportunity here. So, Brent, weekly bullish towards 100 because we broke above this until now year-old resistance area, this rectangle. Near term, also bullish. Potential of not even really experiencing any sort of meaningful correction to get in early. So also towards 100. That is Brent. And now let's look at the last one. I'm saving this. Let's look at carbon for this week. That's what I said last week, and it's exactly happening as expected. Yay! So let's zoom out here on the weekly chart on carbon. We do see. So can you see when you're zooming out? I'm going for the log chart because then you can draw the trend lines nicer. If I this makes no sense, and we cannot draw anything on here. So use the log chart for the long-term trend and for like highly volatile markets. So zooming out, okay, channel, long-term, yes. Then since forever we've been hitting resistance near 100. We do have this ascending triangle. Now I'm zoomed in enough, so I go away from the log chart. We are so midterm is neutral because we are in this triangle. Ascending triangles are usually resolved to the upside, by the way. And the upside is 100, so that would be quite interesting if that was to happen. Within it, we have a descending channel, which is most relevant for the daily chart. So midterm neutrality, nothing really is happening on the MACD. Do not take any MACD signals as long as we are in a sideways trend. Yeah? Oscillators, maybe relevant so-so, usually interesting when you actually hit some resistance or support. So neutral there. Let's have a look on the daily chart. Daily chart is informed by this descending channel. Yeah, so near-term trend bearish since quite some time. And this here exactly happened. And I find, I wrote about that last week on LinkedIn. Every day I publish a little outlook. So do follow me if you're not doing that already. We did have like strong downtrend, strong down move, a little bit of sideways. Strong down move, a little bit of sideways. Strong down move. So if we continue that, then maybe we have like a little bit of a sideways trend before we push even lower. But this menial, really tiny move stays are best observed on the intraday time frame, but we're not going there right now. So overall, even if we were to experience a little bit of a sideways move here, yeah, overall I still do think that we are hitting this lower triangle boundary. I think that would make sense. Volume, let's have a quick look at volume. There you go, still strong. Can you see volume is up as the market moves lower? So that means the bears are still convinced and they're putting money behind the move. So that's good. I mean, good for the direction, maybe not so good for depending on who you are. No, wait, cheaper carbon should be good for everyone, right? Okay, so I do believe 80 is for now the target for the week. I cannot say if, once again, we would be moving a little bit sideways before we move lower. Right now, there's no evidence for the market to move a little bit sideways. So that's just me thinking it because it happened twice before, yeah. But let's keep that in mind. When am I wrong? Okay, so I am wrong. So we can see how cleanly we pushed below the support levels. So they should now act as resistance. I think we would be wrong if we actually push probably above this range here somewhere. Then I would believe that the bearish move towards 80 is a little bit delayed. And right now I do see this as being the less likely trajectory because we are firmly in oversold territory. Nothing is happening here. This is looking good for the bears as well. So 80. And if you push below 80, then you can see like 80, 78. And if you push below that, then probably continue within that channel. But it's a little bit far for now, so I'm just putting it right here. So, carbon, weekly chart. Oh, it's not loading. Okay, carbon, weekly chart, neutral because of the triangle. Usually breaks higher, but no guarantees. Daily chart, bearish within the channel, possibly towards 80 and below. Okay, cool. That was it. Once again, I hope you enjoyed that. If you find this useful, and hey, if you want to do it yourself, if you want to be the technical analysis expert in your company, or if you want to make technical analysis more available to your trading team, then once again, I do encourage you to have a look at the clevermarkets.com website, go to training. I've been doing this for years and years and years. So within 7 weeks, I'll squeeze in 10 years of technical analysis education. It is the only course out there that actually focuses only on European energy markets. So if that is you, do consider it. Thank you very much. See you next week. Bye bye.